Yep, so I made $5,000 off the stock market in one day, and here's how I did it. Before I get straight into it, I'm going to sort of share my journey as to how I started investing in the first place. If you're someone who has been wanting to learn about investing, how to get started, how to make strategic, smarter investments, and to grow and build your wealth, you are in the right place. I am a wealth coach, and if you do want to work with me and want to explore some of my services, please check in the description below. So I started investing back in 2017. I had a friend who was very ahead of herself in terms of managing her finances, and she was just very proactive in educating herself in regards to her money. She had actually a guy she was dating at the time who was talking to her about investments, and that kind of spiraled her to do her own research around investing money and building wealth. And so she started seeing a financial advisor, and this is like third year university. So university, college, this is usually the time where everyone's partying and having fun. Nobody's really like taking these things serious when it comes to their finances. Everyone just feels like, oh, I'll deal with that. Like when I'm done school, I'll figure out how to pay my debts and get a job and all of that. But she was very ahead of the game just because of the people that she had in her circles that were able to put her on. And this is why I always say it's so important to be mindful of your friend group and your circles. Are they adding value to your life, or are they subtracting and taking away? And in this case, even though the guy she was dating, it didn't last, this guy obviously put her onto some game. And I think one day she came home, we were rooming with each other back then, and she was talking to me about how she's seeing this financial advisor, and she just kept bringing this up. And I was like, why do you have a financial advisor? Like, you're so young. Like, what kind of money? Like, you have that much money? What's going on? Like, I want to have that much money too. Put me on. And she was like, no, she's been doing some saving, and she wanted to learn how to have more of her money work for her. So that money that she was putting into whatever investment account her financial advisor was recommending was earning interest. And I didn't really realize how interest worked back then. I always thought interest was something that was working against you. That was how I learned about interest, in terms of like credit card debt, and like someone owes you interest on something, you have to pay them more back once you give them back the money plus interest, things like that. But I didn't realize that interest also worked for you the other way around. And that was how wealthy people stayed wealthy. This is how people remain rich. Not off of just the money, the initial money that they were making, but having that money work for them through interest. And so she said there was like this thing called a guaranteed investment account. It's a type of investment product. So when people think of investing, we always just think of stocks, but there's different types of investments. And so that was when I first learned about the first type of investment that she was doing with her financial advisor, which was putting money into a guaranteed investment certificate. And so GICs is pretty much, you can lock it away or you don't have to, but it's technically like a high interest savings account. So you're putting money in this account that's being locked away for a certain period of time, and there's a certain amount of guaranteed interest that you get on it after a certain term is up. So it could be a year, 2, 5 years. You will get X amount of money back in return based on the interest. And this interest is guaranteed, so it doesn't change. It's not like the stock market where you don't know if the money's gonna go up or down. You don't know what your returns is gonna look like until you're ready to pull out, or when you go to analyze it at the end of the year to see how much returns that you made on your investment portfolio overall. So for her, it was like super easy, and she had someone doing it for her. And that really got my gears ticking. My mind was really like, wow, if I figure out how to do this and I get this right, I'm gonna be able to differentiate myself between someone who's poor and someone who's wealthy. Somehow I intuitively knew that this was the key to wealth that a lot of rich people weren't talking about. This was the key to wealth that we weren't taught in schools. And I somehow intuitively, like I said, instinctively, I knew I need to solve this puzzle. And so being young, being driven, in the summers when I didn't have school, I read a crazy amount of books that year. Rich Dad, Poor Dad, Robert Kiyosaki, I talk about him all the time. That was one of my first personal finance books. I read One Up on Wall Street by Peter Lynch. That was amazing at getting me to understand the stock market, how to invest in stocks, when to pull out, how to assess the market. I was actually very strategic about it because at the time I started investing, Canada was about to legalize marijuana. And so I knew that that was going to be a very hot industry. And it was, especially in the very beginning. It's not so much now. And this is why you really need to understand how to invest. And you need to be watching the news. You need to be staying up on current trends because things are always shifting. And if you don't have the time to do that, you have to hire an expert like a financial advisor to do that for you, like my friend did. But I had the time. I wanted to know how to invest for myself. So I educated myself on the different financial products in Canada. Every country has their own. Some of them, they're very similar, but you need to do your research. Listening to podcasts, just reading articles online, just typing in Google, like, what is the stock? What is the this? What is the that? I really educated myself. I didn't have much mentors outside of the resources that I had and books. That's really how I got started. And my friend, of course, too. So as I was learning, she was also learning and we were feedbacking off of each other and what we were learning. And so it was really fun and encouraging to have someone that was investing with me at the same time I was. As she was investing in other products, we would compare our accounts and see what was working, what wasn't. So it was really good to have that accountability buddy and partner. And I always say, like, if you're trying to go after anything in life, definitely it's good to have a mentor or some sort of community or some sort of support, some accountability buddy to hold you to high regard, to make sure that you follow through on what you said that you're going to do, to make sure that you're doing things correctly, right? So I was very fortunate to have that. And so by the end of that year, I had planned to save up $5,000 and I did. I wanted to start off with a lot of money in the stock market because I wanted to diversify my portfolio. That was something I learned when I was researching, having your money in different baskets. You don't want to put all of your money in just one company. You want to diversify and have things in different industries. You want to have your money in different mutual funds in different industries, different companies from within different industries. So I knew that most of my portfolio would be geared towards that, one or two stocks, and then the rest of it would be mutual funds. And so that's what I did. I set up my account. By the end of that year, into the next year, I had doubled my investment. So I went from $5,000 to $10,000. But here is why you guys are here today, right? Because you want to know how I made $5,000 in one day. So that stock that I invested in was, drum roll, Beyond Meat. So this is the crazy world of IPOs. I love IPOs, but they can be super dangerous because they're super, super volatile. And at the time that I started investing in Beyond Meat, it was right in its inception in 2019. So this is like a year or two after I started investing. I was in it for a while. Most of the time, I invest for the long term, like 99% of the time. But Beyond Meat it's a company that I had eyes on for the long term, but I also knew that it was going to be very volatile because it was still a very controversial idea, creating something that tastes like meat out of plants. And so I knew that right away, like, a lot of people were going to get on board, especially a lot of vegans, a lot of restaurants. The hospitality industry could really hop on this idea because it's a great way to cater to people with alternative diets and restrictions and people that want to eat healthier. So I saw it as being an important asset to my portfolio because I was vegan back then and I'm still very much plant-based for the most part. So I do believe in Beyond Meat and I still eat Beyond Meat even to this day. And there's other brands now too, but there was something about Beyond Meat that I really loved. And I said, I want to put my money into this. So I put $1,000 into it at first. And then I would add a little bit of more money into it. I think eventually I added like $500. And it was kind of risky because it was one of those stocks where literally in its first couple months, it was up like 300, 400%. So I was one of those people that got into it when it was going up. And that could be very scary because when something that's volatile, it could be up 300% one day and then down like 200% the next. And so I was watching it every day. And I always tell people this, if you are putting money in volatile stocks, you have to be checking in on it very frequently, especially if you're not just investing for the long term. Like, if you don't care how it's performing now and you're going to have this stock 40, 50 years from now, great. But I wasn't quite sure if I wanted Beyond Meat for the next 40, 50 years. And I mean, to be honest, I kind of just wanted to make some little fast money. So I had my money in it. And I had taken it out at one point and I decided to put my money back into it. And the time I decided to put my money back into it, it went on that extreme uphill increase to the $5,000 that I made. And I literally remember going into my bank account and seeing that I had $5,000 worth of Beyond Meat in my portfolio account. And I sold that bad boy. And let me tell you why it is so important to understand the psychology of money, but also to diversify your assets, because I could have easily lost a lot of that money. Literally the next day, that same stock dropped 200%. So if I had left my money in that account for one more day, 1 or 2 more days, I can't remember that much clearly now because it's been so much time like that has gone by, but I vividly remember like a day or 2 later checking my account after having pulled out my money or sold the stocks and realized it went down. So I could have lost more money than I actually put in. So I think that's just show you guys like how risky the stock market can be. A lot of people are in it for quick wins. I was investing 2 years even before Beyond Meat. Beyond Meat was not my first stock. So I didn't put all my money in just one stock and bank on it. I had money in other investments and areas, and I kept shifting things around, and my portfolio would adjust as trends would change and the climate of the economy would change. And so that is just really a testament that it really is that easy to make a lot of money if you know what you're doing within the stock market and other investments too. But you really have to educate yourself, and you really have to be precautious and to set up certain security nets to prevent yourself from getting tangled in a bad financial situation within your investments. So after having made that $5,000 in one day, I really was like, bruh, if I had known this 5 years ago, oh my God, how I would have hopped on investing so bad. And I think that is something that people don't realize. Like, we work so hard. People are working 2-3 jobs when you literally could be making $5,000 in one day. Honestly, I'm gonna be very honest that this doesn't happen all the time. If anything, what happened to me is very rare. And I've never had a situation like that happen again in my 5 years of investing. That was the one time I had made that much money in one day. But it was also very risky, because if I had kept that money in for one more day, like I said, 1 or 2 more days, I would have lost it all. So I obviously wasn't investing for the long term. I was investing for some quick money. Some people would call it day trading, where you're trading by the day and you're really watching how things are fluctuating within a 24-hour period. I had the time to do that, right? So that's one big thing that you need to take into consideration when you are investing in the stock market. Depending on how frequently you want to invest, you have to have the time to do it, which is why a lot of people outsource that and hire financial advisors. You have someone else investing your money into these stocks or mutual funds and different financial products for you, so you can take your hands off on it, trust that the person is an expert at what they're doing, and allow them to make money for you. Also, we recognize that the stock market is very volatile. That was obviously a lesson that I knew going into it, and that was why I was watching that stock so hard in the beginning in its IPO days. Most IPOs, in the first couple weeks or days, there's a lot of hype around the brand, and so sometimes, not all the time, but there is a surge in the price of the stock. And so a lot of people get excited in the beginning of an IPO, but also the IPO can go the other way. It can go south. Companies launch onto the public stock market and actually don't do that well and actually underperform. So just because a company decides to become an IPO and launch and have public stocks in the stock market doesn't necessarily mean it's going to be a successful company. So that's something to be mindful of. But I knew going into it that Beyond Meat was an IPO and that it was going to be volatile, and I was just capitalizing off of the rush that was happening, but also investing in it because it was something that I was in alignment with, and I'm still in alignment with, and I eventually will probably add Beyond Meat back into my portfolio. I just haven't really been actively investing as much the past 2-3 years because I took a gap year, didn't have much income coming in. So now I'm just slowly getting back into actively investing. But a lot of my investing in the past 2-3 years has been passive, and I've just allowed my robo-advisors to kind of take care of it for me. I was also willing to lose money. I think some people forget that when you are actively investing, when you are more aggressively investing and you are investing on your own and you're investing in stocks, you have to be willing to lose money. You are going to lose money however your strategy is when it comes to investing, whether you're a low risk investor, high risk investor, markets are going to go up and down. And so you will lose some money at some point. The goal is to not lose more money than you put in, but sometimes you will see returns on your investments, and sometimes you will lose money on those returns just because the market is fluctuating. And that is okay. You need to know how to adjust, how to pivot, how to tweak your portfolio to withstand when times are hard and when the economy is not doing good, and to tweak it for when times are doing good and to maximize your potential profits. And I had a diversified account. So that's something that I mentioned earlier, where I make sure not to have my money all in the same companies or in the same type of financial products or in the same industry. I would switch things around. I'm going to make sure that I have money. If I have money in the tech industry, I'm going to make sure I also have money in maybe alternative medicine, or I'm going to have money in the food and beverage industry. I'm going to have money in Tesla and the automobile industry. So I always made sure to have money in different things. Always. Never put all your eggs in one basket. But yeah, these moments are rare. So this $5,000 in one day, I just want to remind everyone, disclaimer, that this is very rare. Most people get into the stock market because they want to get rich quick. But the richest and the best investor of all time, Warren Buffett, he has always championed long-term investing. He never invests in companies that are just for like a quick buck. He's played the long-term game, and because of that, he's been the most successful. He's been the most patient. And I think that's what it comes to when it comes to investing. Everybody is impatient. Everybody wants to make quick, fast money because they've seen real examples of that. Just like me, I'm one of those real examples that you can make a lot of money within a short period of time, but it doesn't happen very often, and very few investors are very successful at managing and investing their own money. So I'm a very small percentage of investors. I think the number is about 10% of DIY investors are actually successful and actually beat out the market. So you may not be that great at investing, even though you want to. And so I always tell my clients, the first strategy is to have someone invest for you. Go talk to a financial advisor. If you want to know how to DIY invest, you can hire me, someone like a coach, or you can just rely on a financial advisor to manage your money for you. And I think that's the best number one strategy. I even do it for myself. I obviously still go in every quarter or so and just check in and see what's happening. But I honestly rarely look at my investment portfolio because I know that it's being well taken care of. And the only time I really go in is if I need to sell a stock, because I've heard something in the news about a company, or I just feel out of alignment with one of the stocks I've been investing in, or I want to add on a different stock, or I want to add on a different financial product, mutual fund, ETF, whatever it may be. But it's so much easier when you're just getting started to have someone do it for you, like my friend did, and she was seeing a financial advisor first and really taking her time to understand how the stock market worked before putting her money into it. So that is my story of how I made $5,000 in one day. If you want to know the details of how I made that trade, how to buy, how to sell stocks and shares, understanding the different financial products out there, you can link me in the description below, holla at your girl, schedule a 20-minute clarity call, and we can see if working together one-on-one will be the next best step for you. I have one-on-one strategy calls where we literally can hop on a call for over an hour and talk about investing, how you want to start investing, if you already are investing, how to maximize your returns and your profits. If you want to deep dive for a longer term of time, I do my 6-month one-on-one coaching program, The Wealth Well. It's currently closed. I'm opening up a wait list for people that are interested to work with me longer term, so we can really take that time to work on your money mindset, really build out a plan and strategize your future generational wealth, learning how to save, pay off your debts, and investing. So if that's gonna interest you, if this story inspired you and you want to be a baddie, knowing how to invest your money, how to have your money work for you, maybe possibly wake up one day and see an extra $5,000 in your bank account because of a trade, definitely want to hit your girl up. I hope you guys found this video helpful. Like and subscribe, and I'll see you guys in the next video. Bye.